Hello and welcome. You're watching Money 9. I'm Sakshi Batra, and on this show, we discuss all about markets and fundamentals, help you understand which way are the markets really headed from here, and how should you be going about your investments in stock markets now. To help us with all of this and much more on markets, I have with me a very special guest joining in. Mr. Kranti Batini joins in from Wealth Mill Securities on this edition of Market Meter. Good afternoon, Mr. Badini, and thank you so much for taking out time for us. Well, the markets have actually incrementally turned quite volatile this entire week. We are sitting on the expiry day now for this series. So far, of course, it has been a tremendous rally. We have been seeing on an everyday basis when the benchmarks were clocking in newer highs, but this week has been a whole lot volatile. How are you reading into these signs? Do they indicate a deeper correction coming in, or is it again going to be surprising on the market's end? And after these small dips, we'll again see bigger moves on the Nifty.
Sakshi, fundamentally, if we see the market mood in the shorter term, market runs on main three premises in the shorter term. One is the sentiment that reflects the mood of the market. The mood of the market in India is quite positive. And the second thing is the liquidity. We have ample liquidity in the market from different segments of the market. It can be from the domestic institutional investors and the foreign portfolio investors, and also the retail, the new league on the market where we are witnessing crores of accounts that is getting added in last 2 quarters. So we are witnessing the liquidity. So it is a fuel to the market. So market have the very good mood, that is sentiment, liquidity, and the third one is that is crucial is valuations. Valuations looks a little bit stretched in some of the pockets in the stocks, but the main headroom is there. If we go through, if we have the Q2 earnings that are due in next couple of weeks, if the Q2 earnings are taking the front run and giving a good headroom for the earnings, definitely this rally can be sustained. And what we are need to look forward is how the global cues are that are going to pan out. Of course, we have been listening the daily waves from the China and what's going to do the Fed. So all these external factors are influencing the market. Overall, if I have to observe the things, we are in a best sweet spot in Indian markets, in the emerging market space. Of course, here and there, the market corrections will come in, the knee-jerk reactions will come in the our ride of the market investing journey. But we are in the best place. Every dip in the market is a good opportunity to accumulate stocks in India.
Okay, understand that every dip can be used to accumulate good quality stocks in your portfolio, even at the current volatile moves that you are seeing. So, speaking about the broader markets as well, we have been seeing that, over the past 1 year, the broader markets have really performed very well. But at some point, there were concerns being raised of the overvaluation in this space as well. Of late, in the last 1 or 2 odd weeks, again with the market momentum, they have been moving up higher as well. How are you looking and analyzing at this space, sir? And what would you advise investors in the mid cap and the small cap space to do now? Because they're sitting on handsome profits. Is it better advisable to book some of the profits right here and then look out for better opportunities?
Definitely, Sakshi, wherever the investors are looking at a handsome profit, sitting on a handsome profit, definitely it is advocated and warranted to take some profit from the table, wherever the valuations look stretched. But
Hmm.
one thing what market is witnessing is in the past decade, if you observe, last 3 years, okay, the earnings have been, what we can see is there is a earning stagnation. But right now what we are going to witness is in next at least next few quarters, there will be expansion in the earnings of the companies. That's
Hmm.
what creating the headroom for this market, and that is creating this exuberance in the market. Always markets are forward looking animals. Next,
Yes,
what going to happen in next 4 quarters is the key and crux for these market journey.
sure. Absolutely, sir. So, also wanted to understand from you. We have been seeing a few pockets which have not yet participated in the rally. Talk about the banks; they have been underperformers in the rally so far. The auto sector has also not really performed very well. Going forward from here, is it advisable to look for value in these pockets which have not so far participated? Because there are a lot of quality names in these sectors as well.
So actually, see, always in stock market, the liquidity flows from top to bottom. So right
Hmm.
now, the market is looking for opportunities. Where are the value buys in the
Hmm.
quality ones? That's why
Hmm.
what we are witnessing is wherever there is a value, this excess liquidity in the market is flowing towards these undervalued pockets. But
Hmm.
one thing one need to be careful in these markets is it's not like that you need to stick to every undervalued stock
Okay.
where the undervaluation is there, and it should match with the upside potential and also the quality of the management. These are the
Hmm.
crucial things investors need to understand, and those are the pockets investors need to stay. So as you rightly said, there is again a revival is that's coming back in the banking, and also what we are of late we are witnessing is some of the stocks like Coal India and other
Yes.
PSU stocks are going up. So that's what I said. The liquidity drive is going towards those kind of pockets, and they are fueling these stocks. These stocks have been sleeping for quite a long time, last nearly 2 3 quarters. But what we are witnessing is in these kind of quality packs, we can say, where the valuations looks very attractive when we compared with the broader market valuations, the money is coming into these kind of pockets.
Yes, absolutely, sir. And since you mentioned Coal India, I was about to come to that because I wanted to seek your views on the energy space. Looking at the kind of scenario that we are in right now, globally, we are seeing that China is facing a power crisis. Domestically, when we talk about, we are seeing the energy prices going up. The domestic gas companies, they have been raising the prices of gases. Even tomorrow, we are awaiting the APM gas prices rise again, which happens once in 6 months or every year. So, how are you looking at the kind of disruptions that are getting created in energy shortages in some cases, coal shortage in some cases, disruptions over there? How are you looking at this space? Is there, something, some strategy that investors can adopt at this point in time in this space?
So actually, investors need to be very selective in these pockets while entering. Of course, last 1 week, what we have witnessed is these stocks keep rallying nearly 10 to 15% from their bottom prices. So
Hmm.
we need to see where this value, and also the importance crux in these stocks is where is the sustainability of the earnings. Of course, there will
Hmm.
be a sustainability of the earnings, but on other hand, we keep on coming up and listening to the stories like the EV is coming, and it is the future of the world, and these stocks are going to become the back burners. But what I believe is yesterday, if we observe the OPEC report, in India we are going to see the oil demand is going to sustain. Uh, what I sense in this the whole gamut of this investing journey in this space is one thing is investors need to stick to the stocks which are very attractive in terms of their valuations, and also the the earning growth in the next couple of quarters is extremely important. While
Hmm.
coming to these kind of companies like Coal India, there is a overhang of the ESG norms that are applicable to these kind of companies is
Hmm.
also going to play a key role in terms of entering into these stocks at this price juncture. So
Hmm.
investors need to act. My sense is investors need to act. It is a stock specific game. You should not get into a broader based sectorial view. The game is on for the stock specific movement is concerned.
Right, absolutely. And when we are talking about stock specifics, I need to bring up the stocks that you've been recommending on our shows and which have performed very well in the past. Since we began talking about energy, let me begin with one of the stocks that you had recommended from the oil and gas space too. And IOC is something that I'm talking to you about. We have been seeing over the last few sessions that the stock has really performed very well. And, right at the early stage, you had caught this trend and you had recommended this stock to all our viewers, and which has performed over this course of time and given handsome returns to investors. Apart from that, from the power space again, ABB Power was another stock that you had recommended. 98% of a sharp return has been seen on this stock as well. So congratulations to you on picking out such incredible stocks for all our viewers. Two stocks, what are your thoughts on both of them for now?
Sakshi, as you rightly mentioned, Indian Oil Corporation, we advised to the investors on your show way back in the month of Feb. So the the returns looks like it is 27% peak return, while we advised the stock at 100 rupees. But they given nearly 14% dividend. If the investor would have invested in the before March, the dividend yield is at 14%. When
Yeah.
people are thinking and battling for just a 1% return, a high return in fixed deposit, here is the stock which delivered nearly 14% dividend yield plus a capital appreciation of 27%. This is one of the finest stock to invest with very good margin of safety in this stock. This was the reason we educated this stock for the investors to invest. My sense for the Indian Oil Corporation, if we observe the trend, this is one of the India's largest company in terms of the revenue generation is concerned. So because of their corporate governance, because of their cash flows, despite of the buzz what we keep on hearing for the electric vehicle, Indian Oil Corporation remains our top pick in terms of the oil marketing companies to invest.
Yes.
Investors to stay on with this stock.
Okay, understood. And what about ABB, sir?
ABB, as we are witnessing a rally in the power stocks, and also this is a complete, a different tango to the Indian Oil Corporation. This company is venturing into installing the infrastructure for electric vehicles, charging points and all. And also, as there is a lot of emphasis is given, the infrastructure is the major key for the markets in the days to come. So ABB Power is ABB Hitachi ABB Power is in a best place to deliver the good returns in the coming days. So we educate investors to book some profit from the table at this point of time, because the stock has risen nearly 98% from the point we recommended. So take some profit from the table, and if at all any dip that market gives during this time, they can re-enter into the stock.
Absolutely understand that, sir. And what would you recommend for today, sir, as a new recommendation?
Sakshi, it's a follow-on recommendation for the investors. A
Okay.
couple of days back, I was there in the fiber web, went to look into their expansion plans and also into their the factory at Daman. So, what I believe, this company is best positioned to take up the opportunities that comes from the demand for the melt blown and soft blown textile is concerned. One of the concern is, since the crude oil prices has been rising there, one of the major key raw material is polypropylene. The prices are going up, but the company could able to pass on the increase in the raw material cost to their end users. So the margins can be sustained, and also freight increase, but because it's a 100% export oriented company. Last quarter they could able to supply to the Indian vendors also, so they could able to keep the margin high, and the stock trades less than its book value of 55 rupees. And if I have to analyze with the price earning multiple, the stock is trading at a 10 PE. So looks very attractive valuation, small cap company with 150 crores market cap, and also zero debt company. And the new products they are going to launch in the coming 4 or 5 quarters is going to have a major beneficiary in terms of their earnings are concerned. So I educate investors to buy the stock with a long term view at this current price point also, which going to create real returns to the investors.
Okay, understood that, sir. Thank you so much for sharing your insights on the markets and these recommendations with all our viewers as well. Always a pleasure having you with us. Thank you so much.
Thank
Let's
you,
now move
Sakshi.
on to see how the markets are trading at this point in time. Of course, we are over half time now, and we can actually see the benchmark indices still trading with some losses of 0.2%. 59,298, the current level of the Sensex, which is down about 114 odd points. The Nifty 50 is also trading with a loss of about 50 odd points at 17,662. The Nifty Bank is now seeing some kind of recovery from the lower levels of the day, and it's down by 1/10%, and 37,687 is the current level that we can see the index trading at. Now, what's improving at this point in time? Whole lot of volatility throughout the trading session so far, and we are now seeing the broader markets inch up higher into the green, especially the small cap indices index, which has actually moved up and is bucking the trend at the moment with 0.5% gain. Moving on to the now, talk about the sectors and then the gainers and losers as well. Sectoral moves suggest that there are just slight gains coming in from PSU banks, pharma, and realty. Rest all of the other sectors are still trading muted, or with losses of about 1% as well. As far as the auto index is concerned, media stocks as well as some of the banking counters too. Let's now move on to see how the gainers and the losers are placed at the current level. So it's the financial services stocks that are pulling up the index higher. Bajaj Twins are up by over 1%. Dr. Reddy's Sun Pharma from the pharma pack are contributing, and Grasib is inching higher, almost 1% in trade. On the other hand, when we talk about it's the Nifty 50 losers that we are talking about, the auto space is still trading with some kind of losses right ahead of the auto sales numbers that will be coming out, monthly sales numbers that will be coming out tomorrow for the month of September. So Bajaj Auto, Hero Moto down in trade. IOC is, right now seeing some kind of slippage coming in over 2%. Power Grid and Asian Paints, the other counters that are trading with slight losses. Overall, a very, very choppy session throughout the trading session because it's the expiry day for this entire September series and monthly expiry as well. We'll keep you posted as to how the markets progress from here and what should be your strategy as far as what the experts are really saying. And for that, you need to subscribe to our YouTube channel and stay with us via social media handles and also visit our website, money9.com. Thanks for tuning in.